Imagine trying to withdraw your Bitcoin from an exchange only to realize all Bitcoin withdrawals are paused. This is exactly what happened yesterday and earlier today on crypto's largest and most trusted exchange, Binance. In this video, I'm going to be talking a little bit about why this withdrawal pause happened, and I'm going to talk a little bit about the Bitcoin Lightning Network, Binance as an exchange as a whole, and on top of that, I'm going to talk about how you can secure your cryptocurrency so this never happens to you. Stick around to the end to find out. So jumping right into it, we can see that Binance calls Bitcoin withdrawal pause a learning opportunity after reports of congestion issues on the network. So they have now resumed the Bitcoin withdrawals after a temporary pause, with transactions shown as successfully sent to users' wallets. There still may be delays with actual transaction verifications, however. Binance paused Bitcoin withdrawals twice from its platform in the past 24 hours, citing a congestion issue, inevitably leading to a massive speculation of the exchange's health on social media. So they kind of came out and said that there's nothing wrong with the health of their exchange and that they're going to be learning from this opportunity and maybe even potentially looking into the Lightning Network for withdrawals. So why exactly did this happen? Well, first off, let's talk a little bit about the Lightning Network. We're looking to enable Lightning Network withdrawals for users within the next few months. The Bitcoin Lightning Network works just like any other network. Users can withdraw via the Lightning Network from the Binance platform into their private wallets. More details will be shared by our team once they are available. So you might be wondering, what exactly is the Bitcoin Lightning Network? And how does it work? So we're going to talk a little bit about that. So it's a layer 2 solution on the Bitcoin blockchain. Layer 2 solutions are key components for scalability in blockchains. The Lightning Network is crucial one owing its association with Bitcoin and its ability to help add utility value to the chain. So when Bitcoin was first created by Satoshi Nakamoto, it was created as a peer-to-peer electronic cash system. This means users could transfer value without an intermediary. At the time of its inception, the creators of Bitcoin concentrated on two aspects mainly, without focusing on scalability and transaction throughputs. A lot of people like to, down talk how slow Bitcoin is and how they have a lot of transaction issues and high fees. So the Lightning Network is supposed to solve that. So Lightning Network leverages the concept of payment channels as stated by legendary Satoshi Nakamoto. The protocol enables the creation of peer-to-peer payment channel between the two parties. So once established, the channel allows the transacting parties to send a limited amount of transactions that are nearly instant and inexpensive. So if Binance kind of had this or was using the Lightning Network, probably a lot of these issues would not have occurred. It acts as its own little ledger for users to pay for even smaller goods and services such as coffee without affecting the Bitcoin network. So some of the tangible advantages are going to be scalability, speed, micropayment support, and low energy requirements. So hopefully Binance and other exchanges can implement the Lightning Network so people can start sending transactions a lot quicker and for lower fees and have higher throughput. So getting back into this article here, let's talk about why exactly this happened. The Bitcoin mempool was clogged. So the pause on Bitcoin's withdrawals from Binance occurred amid a drastic increase in unconfirmed transactions. So the data from time chain calendars showed more than 420,000 pending transactions going back as many as 55 blocks. So the Bitcoin mempool, which is short for the memory pool, is a type of data structure used by the Bitcoin network to store unconfirmed transactions. When a Bitcoin user initiates a transaction, it is a broadcast to the network and add to the mempool of each full node that it receives. So think of the mempool kind of as a waiting room for these transactions as they're being included in a block by the miner. But what happens is miners prioritize transactions with higher fees. So when transactions have lower fees or larger sizes, they might be left in the mempool for a longer period, and that's exactly what happened with Binance here. One of the possible reasons for a later surge in Bitcoin transaction fees was Bitcoin's sizable backlog in ordinals, a protocol for minting NFT-like assets on Bitcoin. So called inscriptions, the total number of Bitcoin-based digital assets surged past 4.6 million on Monday. To put that in perspective, just last week, Bitcoin ordinals inscriptions only totaled 2.5 million. So this is huge in general, and this is probably most likely why this pause in transaction happened. They were trying to use low fees on Binance, and they couldn't get these transactions confirmed due to the fees. So they increased that fee structure, and then bam, the transactions and withdrawals finally went through, but it's definitely scary. Don't get me wrong. So let's talk a little bit about the outflows, and then I'll talk about Binance as a whole, and then make sure you stick around to the end, and I'll talk about how you can protect yourself from this happening in the future. A lot of people are commenting about the huge Bitcoin outflows from Binance today. True transactions, 117,000 Bitcoin and 40,000 Bitcoin respectively. In reality, these are Bitcoin sent to newly created exchanges or addresses that belong to Binance. Effective outflows are more likely just about 10,000 Bitcoin. So people are thinking there's massive outflows and people are going to be dumping Bitcoin. In reality, that's not really what happened. Binance confirmed this, saying this outflow is actually movements between Binance hot and cold wallets due to Bitcoin address adjustments. So if we go on DeFi Llama here, you can see that the total value locked hasn't really changed at all from, sure, it dropped a couple billion from the past day, but it's stayed pretty steady throughout this whole year, essentially. So it's nothing to be necessarily concerned of as far as people dumping Bitcoin on the open market. But despite all this reassurance, the price of Bitcoin did drop. The leading cryptocurrency changed hands at 27,955 at the time of this writing, down over 3% on the day. So I think we're still sitting at a sub 28,000 Bitcoin. Definitely caused a lot of panic in the markets as, Binance is the top exchange by trading volume. And with trust, they're one of the only exchanges that really doesn't shut down a lot of the times. They don't pause withdrawals a ton. And if you compare it to the next biggest exchange, which is Coinbase, they're doing about 10 times the actual trading volume. And they even have more pairs, number of markets, and more number of coins, and a crazy, crazy amount of weekly visits compared to Coinbase. So a lot of people are concentrating on Coinbase doing high volume, whereas Binance, they just have a ton of weekly visits. So it's definitely going to be one of the most trusted exchanges out there. Personally, I like using Coinbase as I'm in the US when it comes to outflows. So if I want to transfer my Bitcoin into USD, that's typically what I'm going to be using is Coinbase. And they've been pretty trusted and good for me as well. I haven't had too many issues with them, but the best way to protect yourself, and this is really what I want to get into, is to make sure you're using a hardware or software wallet. So I'll link in the description down below to a hardware wallet that I use, which is the Ledger. And then also you guys could use a software wallet like MetaMask to store your crypto, whether it's Bitcoin, Ethereum. They support tons of different assets. And what this means is when you're using a hardware or software wallet is you're owning your own keys. You're going to have a passphrase, a 12-word passphrase to get into your account, and you're not holding your crypto and your keys on an exchange. So when you're holding on an exchange, you have a counterparty risk, right? And we saw that a lot with Celsius, Voyager, a lot of these other exchanges that went down, and people lost a ton of money when they were locked into these exchanges. Even if you have your money on Binance or Coinbase, they freeze up. Even the top exchanges freeze up and pause withdrawals, especially when there's high volatility. And usually when there's high volatility, that's when you want to be able to sell and access your crypto. So it's very, very important that you guys are storing your own keys. This way, you're going to be in control of your crypto, and you're going to be able to send it and receive it exactly however you like. And you're not going to have that counterparty risk. Sure, when you do buy, you do obviously have to use some sort of exchange to get your inflow, to get your US dollars on there. But once you get that crypto, make sure you're not holding too much on exchange. I'm not saying don't hold any. You can hold some on exchange just because it is convenient to buy and sell very easily if you're trading in and out quickly. But if you're investing for the long term or making a long-term swing trade, make sure you are holding your own keys. I cannot stress it enough. If you are not holding your own keys, you will run into issues in the future. And this is how you're going to become a sovereign individual. No one can go into, your own wallet and take away the crypto from you. Whereas these exchanges, they have to report everything to the government. And, if something happens, you have that counterparty risk. So I hope you guys got some value out of this video. If you did, drop a like, comment, and subscribe. I'll catch you guys in the next one. Thanks.